Welcome to Mortgage Lending Mastery, the world's longest running podcast in the mortgage industry. I'm your host, Lady Jen Duplessis, with over 4 decades of mortgage, real estate, and financial services experience, providing the knowledge you need to advance your mortgage practice quickly and efficiently. Hey, everybody, welcome. Welcome, mortgage fans, mortgage lending fans, right? Welcome to the show. We love it. And today with me is Phil Crescenzo. I love that. Is it crescendo? Yeah, it is. No, it's Crescenza, not crescenzo. Crescendo. Yeah, I was trying to be all musical and everything, but I'm happy to have you here, and I've enjoyed having a little conversation with you in the green room.
Yeah.
You know, as we start moving into this here now, and I think right now as we're talking, we're post presidential election 2024. And by the way, I have to say the years because we've done this for so many years. We're post presidential election 2024. Feds had lowered rates last week, and that's had an impact on mortgage rates, obviously. Where hopefully everyone has their business plan done, or maybe they're working on it right now, tidying it up and fine tuning. And that's what I want to talk about. And you've got 20 years of experience in the business. You're a top producer. You've got a team going. You're down in South Carolina. And that gives everyone a little breadth of what you do and kind of what your history is. So let's just dive into your perspective on today's market and what you think is going to happen over the next, let's just say 6 months or so, because we have a new year, new goals, things.
Yeah.
Then we have a president being, installed, and that's going to have an impact. And of course, the movement of that president, et cetera. And then we have the spring market. So let's talk about what your perspective is of what's happening now, what you forecast for the next, 6-7 months.
Well, if I look back at what's happened even throughout the year and then the prior years leading up to now, it's not, I think it's common knowledge. We're in a high interest rate environment. We have been for several years.
Yeah.
And so statistically, at some point, something has to come down, but that's where everybody's at. And so I think eventually, sure, heading into 2025, rates will come down. However, we're not waiting for that. And my team and my branch, and we haven't waited for that. And it's worked in 22, 23, and tremendously well in 24, looking at what we have right now and what all of this actually means. So election and high anxiety, and the media's flooded, and there's people on both sides, and it's chaos.
Yeah.
And inflation. So households are strained, the budget's strained, and then there's a lot of news and information going in different directions. So I think emotional fatigue and overload with the news and what's going on, and sometimes doesn't really even affect the individual making the decision. They're just frozen and they don't know what way to go. So I saw the biggest adjustment in rates on just the news that there would be a cut. That happened early September.
Right.
Early September.
Mm-hmm.
And rates saw dramatic impact from what we've seen, the first, adjustment, but it predated the actual cut. Once the cut took place, then it was a whiplash the other way. Yeah. And we lost almost, and again, when you're focused on, the election and all that in the month of October, that's what everybody was focused on. We lost almost, we're hovering close to 6. We're at 7 by the end of the month. We're pretty close to it. And now we're hovering around that, a little above, a little below. So learning how to look at reality, what does it mean today? What does it mean to the homeowner or the home buyer or the realtor or the builder, and make it make sense and do it quickly and simply. That works. That's what people want. They want realness, I think, and they want some clear direction, and they don't really want to be sold, and they're tired of hearing the same messages, I think.
Yeah.
Waiting on this, survive till 25, all this stuff.
Survive till 25, and I'm using thrive in 25, which is
Yeah.
hilarious. And I don't just, coach mortgage loan officers and realtors. I coach other business people. So it really is about thriving, and moving forward. And really, I didn't care. I mean, I do care, but who is elected, but it doesn't matter who's elected. It's the next year. And now we're saying, okay, so we've got to thrive in this next year and look forward to it. So you brought up a point about, understanding the anticipation of market changes, with the feds. And, I'm a dot reader. I'm a Fed dot, analyzer. I do a lot of that analyzation, and I love Fred charts. I look back at history. I started in the mortgage business in 1981. So I'm past 40 years doing this. Well, not doing it anymore, but I'm still, associated with the business. But one of the things that happened is post Jimmy Carter, with high inflation and high interest rate. I mean, not as high. Well, not as high as now. I'm not talking about that, but high interest rates under Jimmy Carter. Reagan came in, one of the things everyone thought was going to happen is, oh, he's going to lower rates. He's going to lower rates. But what in fact happened is rates went up dramatically. So looking at understanding of markets, and I know that you're saying, hey, my anticipation is that they'll go down. So let's counterintuitive that and say, what could Trump do that could affect rates going up? And then what would be a strategy for that? Because I think one of the things that a lot of loan officers are lacking is the understanding of how markets move.
Yeah.
Truly how they move. And you seem to have your finger on that. And I think that's really important to be able to amplify and give to clients. So let's talk about history, and then perhaps some of the ways that you might be talking to your clients now.
Yeah, I agree. It's being able to make it relative, sure, talking about the future, but if I'm talking to a buyer and I hear maybe a little less experienced, newer salespeople acting like it's a guarantee you're going to be able to refinance come June 2025, and
Yeah.
they're picking a date on a calendar,
Yeah.
and they have no idea and nothing backing that up other
Right.
than just telling somebody what they want to hear. There's
Mm-hmm.
no factual basis for that. There's no precedent. There's no historical, there's nothing to reference that's going to say that's going to make sense. So I've taken the opposite approach. Let's say they don't move. It forces your mind to focus on now.
Mm-hmm.
Stop focusing on the future. It's a better practice. It's more ethical to do it that way. We shouldn't be selling somebody something with the hopes that they can get out of it, or, it's not a good fit. It really forces focus on what's in front of us. So I say, hey, you know what? If you had to be in this loan for 2 years, 3 years, forget about refinancing. At some point, if we look at precedent, yes, at some point, the levers are get pulled and pressures go in different directions, and it all works out, and we have clues and indications of how to prepare for this. Well, a lot of times the client's going to look and say, I can afford this. I may not love the payment, but I
Yeah.
can certainly afford the payment,
Mm-hmm.
right? And now we're having real conversations. Now we're having conversations of, let's look at, maybe some excessive spending in 2020 when rates were low, or we took too much out here, or, we're carrying a little bit too much debt. The ability to break down a real conversation in a tactful, professional way of saying, like, maybe the 25,000 on the credit card for no reason when you have 50,000 in savings. Why? That's just
Yeah.
bad
Yeah.
money practice.
Well, and that's the fiduciary responsibility that, I wish loan officers had the, like raise their hand. I mean, we get FBI, fingerprints, but we don't raise our hand and go, I promise to take care of my client, and I pull the wool over their
Yeah.
eyes, right? And I think that's a great fiduciary responsibility. It's delegation or reallocation of assets and funds. And I used to call it my entrance, holding, and exit strategy. What is going to be our entrance strategy? What's it going to look like while we're holding it, making assumptions for good, bad, and the ugly. And then what is the exit strategy if rates go up? What's the exit strategy if they don't go anywhere? Because no one cares about the dot. They just want to know where it's going. Right. I mean, I guess they do care about the dot, but it's where's the dot going? And Yeah, I love that you're bringing them into the now and, bringing perspective to it, because so many people have been so spoiled for so long with these unbelievably low interest rates that we've had for years and years and years. In your perspective, so that's from the rate side, but in your perspective, let's talk about housing. What are you hearing out there? What are you encountering with, the same old adage of, oh, inventory is low, there's nothing available, those types of things. What's your perspective on the market, either tightening or loosening up? And what are some of the things that would be pushing the market to do that one way or another?
What I'm hearing, a lot of talk and not a lot of action, a whole bunch of talk, even heading up to going back to politics, the policies, this and that, nothing's actually happened. Nothing's been passed.
Right.
It's
Right.
all talk. And so it's hard sometimes to just use that as the response or the answer, but it's so true.
Yeah.
Nothing's actually happened yet. So I think for me, what's worked very well is focusing on adapting, adjusting, pivoting, counterpunching, whatever you want to call it, to make it quick, knowing that everybody's coming to the same place. Okay,
Mhm.
now I'm going to focus on that point right there, and that is where I'm going to stay right there because that's the pivot point. That's where all the action happens because we have the whole masses that just got to the certain point and they stopped. So trying to
Mhm.
get a little bit better at taking it a little further and adjusting, making maybe I'm working my sales cycle a little bit further out. Maybe I'm connecting with builders. Fortunately, for me in the Southeast, we're building the inventory. Other
Yeah.
areas we're building the inventory. If I was in, where I was born and raised in the Northeast for the first half of my
I
career,
was going to say Boston or something. Yeah, that good luck. There's no land.
there's no land. So I would be focusing more on maybe small business owners. I'd be
Yeah.
carving the niche and I would hit that spot until I broke through. I'd be looking at renovation loans. I'd be looking for the niche, that little piece that nobody else is looking at to start to create
In that
opportunity.
market. Right. Yeah, because opportunities are in front of us all the time. Sometimes we're just not aware of them. I think you bring up a couple of good points, about, I mean, one of the things I've been saying is that we are going to have an equity explosion. I love alliterations. But I've been saying, look, we're going to have an equity explosion. And it really actually came true. I was talking to one of my coaching clients earlier today, and he said, my gosh, the HELOC, phone calls have come in because when the feds lowered the rate, all of a sudden everybody wants, a HELOC because they've been waiting to tap into that equity, but they don't want to get rid of that 2.5% first mortgage, right?
Yeah.
But I think that there will be a saturation point where, okay, you can get a HELOC. Well, what if rates go up again? And looking again at history, with Reagan, there's a possibility that could happen. We need to be aware of that for our clients. Versus a cash out refi at 7 versus the 2.5. And again, all that's holistic approaches, right? In
Mhm.
analyzing where the
Sure.
best use of your funds are. But I also think that, there is some pent up demand of the size of my house isn't this. I want to change. Maybe my job changed. Maybe I've been commuting further than I normally do, and I don't want to do that anymore. So I see that there's going to be a lot of, an equity explosion. And I hate to think that people would get to the point where they've exhausted all the options and the only option they have now is to sell their house at a lesser price because they need the cash quickly. So what are you guiding your clients on in your nurturing sequencing and your, annual reviews or your phone calls to clients and helping them understand how to get ready for when the when happens?
I'm really trying to listen a lot better. That skill that I've always tried to develop and I've
Mm-hmm.
never stopped has has proven tremendously well
Yeah.
because I need to sift through what the client thinks what they think they want or what they think they're telling me. And sometimes answering a few questions they haven't asked yet because I know where they're going and not in a like, I'm going to jump the gun way, but like, I kind of see where this is going way. Let me see if my instincts are correct, but let me talk through it. Let me get a little further into it, and I'm establishing the client's feeling better. We're starting to get somewhere. And often by me not trying to be the pro and jumping the gun and just dictating to everybody, this is how it's going to be, but taking a back seat and being very attentive, really paying attention, it's worked tremendously well for me. And I'm duplicating that for
leading
my
from
team.
behind. I mean, you're leading from behind, right? Because we're all leaders in relationships, right? We're leaders with our clients, etc. So if we're leading from behind by listening and really understanding what the true challenges are, I find that a lot of loan officers speed up and then slow down instead of slowing down to speed up. So it sounds like, are you finding that you're taking more time than you did in the past with your clients? Or are you spending about the same amount of time with them in your discovery calls or whatever you call your exploratory meetings? Right. Yeah.
Yeah, I would say it's interesting. I would say more time in different areas and in a more rigorous, I don't know if sorting is the right word, but
Filtering. Yeah.
screening. Yeah,
Yeah.
filtering, screening,
Yeah.
understanding instead of just going in a very predictable path because it isn't right now. And there's real concerns. And
Yeah.
so uh, and then also a client may have never gone through this situation before. So I've never seen in 20 plus years the spread that wide between carrying first mortgage at a fixed rate and equity opportunity combined with, as you put it, the equity explosion. It's already happening in
Yeah.
certain scenarios, right? So, and then the sitting on longer is also creating the swell of equity to increase even more.
Yeah.
This
Yeah.
extra couple years, now we're looking at, the mortgage or the home as a financial instrument. Like, okay, wait, maybe it's not just a mortgage I'm going to make this monthly payment on, but now that I have this equity, I could leverage it into other financial opportunities. Um, I think it kind of slowed everybody down a little bit, which wasn't necessarily a bad thing in some cases, to let's see how things develop. But these are good problems to have, right?
Yeah. Yeah. Well, we hope that they are. And it's not, I mean,
In
obviously,
some cases, in some
right.
cases.
Right. Yeah. In some cases, I mean, even with COVID, everyone said, "Oh my God, I had the best year I've ever had." And I go, "Well, the market gave it to you, regardless, the market gave it to you." So those who were prepared were able to capitalize on it even more. But how much more money was left on the table? So if we're thinking about, this triggering that someone might have, an equity explosion or some type of trigger that will get them, what are you doing to prepare your clients? Because you may be thinking about, oh, I got to remember to call this guy and that girl and this, that, and the other. But are you preparing your clients for and having these conversations of, hey, listen, let's talk about when you want to pull a trigger, what events are going on in your life? Are you having these conversations with people? And if you are, is it helping you grow your database in addition, so that perhaps this conversation with one person leads to several conversations because maybe the loan officer's out of the business now.
Oh yeah, yeah.
Right. Who helped them get that loan in COVID? Yeah.
Yeah, the I would say that the numbers are on our side for the producers, especially if you're producing at a high level, the numbers are definitely on your side. There's a few indications, a few reasons for that, I think, from experience. Um, there's things that I've learned. I think just being humble and being like going through a lot of ups and downs over those years and then realizing like we're in a season and everybody else that I'm working around might not realize this is a season. It's a longer season than we thought,
Yeah.
but it's a season.
Hmm.
And think of a lot of people entered in the business, realtors and lenders, or potential assistants or whatever to enter in the business with a flurry of activity like in 2021, not 2020. 2020, everybody was figuring it out.
Yeah.
It was like the first quarter or so before CARES Act was passed. And then a month or two later, even April and May, rates hadn't seen the dip. So it was only half of 2020. So it was really 2021.
Yeah.
That's not that long. But with all these changes and then a drastic swing, if you take the end of 22, last quarter of 2022 in that range, and then the end of the year 2023, almost 3 full percentage points in a
Yeah.
fixed rate. And so how new to the industry, drastic changes, so that's, the NAR settlement kind of probably weeded out a lot of part-time agents, the
Yeah.
additional restrictions, not having, refis to fall back on probably knocked out half the originators. So yeah, the mortgage IQ required to operate right now is extremely high. If you want to do it at a high level, I mean, you're talking single digits to find these kind of producers that can, stay at 2021 levels and then stay there or slightly grow. Very rare.
Yeah. Yeah, absolutely. I mean, you mentioned something about the IQ. One of the things and you also mentioned this, earlier about the ability to redirect or, be agile, take your strategy and move it into a different direction, whatever the market is, like niching down into, like you were saying, for builders perhaps, or business owners. There's a new AQ out there, which is the agility quotient, that businesses are now looking at, is the ability to maneuver as quickly as possibly can. Not to say that the pandemic would ever come back, but they learned how to maneuver out of that and maneuver back in. But they're saying, gosh, we all have to be really agile in being able to succeed and be resilient. And I know I found that in my, extended career, that, the ability to change quickly and to not hold on, and not be bitter about change, but be better about change, was
Yeah.
the key to my success. And I'm definitely hearing that from you. So, you talk a little bit about disrupting the industry. So share with us a little bit about being a disruptor, because I know that, someone who's listening is going, wait a minute, I don't want to disrupt and piss anybody off. I don't want to,
Yeah.
So how has being a disruptor affected your business? And what do you mean by that, disrupting the industry?
Oh, I love that question. I love that question. Okay. I would say first, it depends what you're disrupting,
Mm-hmm.
right? To the listeners that say, I don't want to disrupt anything. Well, if it's a closed door meeting and you're standing up and cheering, in the middle of it, that's not the kind of disruption we're talking about. If it's a disruption that stirs positive activity, tremendously positive activity, then it's probably a good thing. Then maybe what we're disrupting is the status quo of what
Mm-hmm.
everybody else is believing, but it's not working. I think we need a little bit of disruption. We're,
Yeah.
we're experiencing wild success on fundamentals of just listening better, caring more, and of course, being dead serious about preparation, our guideline knowledge, the depth of our team, what we say we can bring in and commit to. But the disruption is everybody that works with me around town, at least, and in a lot of reviews and things, is that we're able to pull through on things that are a challenge. And within the guidelines, the right way, consistently. And we've been doing this for years. What's the secret? How do we do it? One is, I think, the understanding that we can get better no matter what it is. We live by this. I have to live by this. I can get better. My team believes they can get better. And then they don't take one example, if it's positive or it just lowers the temperature a little bit. It allows everybody to breathe and operate and flow. And I said, listen, here's where we're going to make mistakes. This is built to make mistakes at the right time. I'm just breaking, disrupting this psychological barrier that everything has to be perfect.
Yeah.
And I'm going to mess something up. Or what if this, or what if that? And it's all negative.
Yeah.
All negative.
Always. Yeah.
So that's what I'm disrupting. I'm disrupting belief level that
Yeah.
somebody had a credit blemish, they're not good enough to buy, that becomes who they are, that they're a credit score. The credit score is the person. They're not. They deserve a second chance or a third. My God, I needed plenty in my life. So who
Right.
am I now to sit on top and say, no, you know what, we're going to cherry pick and we're only going to take this type of loan and this type of turn time. No, we're going to take everything that comes in because I don't know what they're coming in with. So I have to make it open for everybody. That is what I'm disrupting.
Yeah.
All these
How do you
barriers.
how do you communicate that with your realtor partners, that, hey, look, we're gonna help everybody by trying everything. I mean, because that's really what it is. We're kind of at the bottom of the barrel in some cases, right? And so we want to help everybody, but that in doing so, let's make sure that your expectations, because one of the things I've learned is agreement, expectations without agreement creates animosity, whatever word you want, to resentment, right? These expectations without agreement. So a realtor still thinks, oh, everything's gonna be perfect because you took the loan. And you're going, oh yeah, well, I'll take the loan, but let me see what I can do. So there's not an agreement to the expectations, and that, creates all kinds of problems. So how are you walking through that with your realtor partners to say, hey, we're going to give it a shot, but just know, we've got to know, write it in blood that you heard me say it. We may have some challenges, and we will get through if we can. And if we can't, hey, we've all worked the hardest we can.
I made a lot of mistakes, so many, but they got smaller over time.
Mm-hmm.
And so maybe I'm the only one that knew I made the mistake eventually. I mean, when I first started, everyone knew,
Yeah.
obviously, right? We blow a closing or whatever,
Yeah.
but that mindset, when I started 20 plus years ago, I went right into the fire wanting to learn, but with the right intent. I
Mm-hmm.
thought I had the right intent, and it was, it just, the outcome wasn't there. And so learning and then realizing like, hey, I could get better, but I just didn't know how to get better or what to get better on, right? But I still have that today. I'm in year 24, and I'm
Yeah.
like, still, that's a challenge. That's a challenge to be new again, have new eyes, to be able to relate to people, to really care because I'm putting myself out there. So now I have, a reputation. Somebody came in, they were directly referred. Every time I put myself out there in my team, it's an opportunity to do great, or it's an opportunity to have a bad review.
Yeah.
We thrive on that. So I'd say there is an agreement, because if you're an agent and you bring me a deal, I got better. I got better over time with the communication of what I was actually doing. I
Yeah.
thought it was my job to say yes all the time and to come through. And sometimes it was. What I've learned is that sometimes it wasn't, but that there was still work that needed to be done, and it wasn't based on a deal. I needed to be at my best to give that person or that family the right information, so that maybe in 1 or 2 months, and I would tell them, whether you end up back here or not with me and my team, these are the things that need to happen. These are the things you need to do to put you in the right position, and here's why.
Yeah.
The commitment to do that, we're on the same page. If it's an agent that brings me something, I would say, here's my guarantee. There's no guarantees in lending. Actually, there are. I'm going to guarantee how this client's going to be treated, how
Yeah.
we're going to react, and the feedback I'm going to give you. I don't know the outcome yet because I haven't seen it, but the guarantee is how they'll be treated, the feedback from my team, and the pride we're going to take, and the care that you sent it to us. There's your guarantee.
Yeah, I love it. Love it. So obviously, then this leads to, I want to talk a little bit about mindset, and then we'll talk a little bit about what you're doing in 2025 to bring in, and now to bring in business, So let's talk about mindset. You and I were talking about this in the green room, and I was saying, my motto, and everyone's heard this on this podcast, is mindset plus mechanics equals momentum.
Love
When I
that.
realized that it wasn't all a mechanical process. I was doing the mechanics of one-to-ones and mechanics of seminars and speaking at events and doing this podcast, right? While I was an originator. All the mechanics, I had all the mechanics down, right? But I didn't have the mindset that was ultimately what I needed to create, double and triple my volume. So tell us a little bit about your opinion about mindset, because you and I were talking, you said, I don't like this word because it's overused, but let's talk about, and I think you were touching base on it there just a few minutes ago, but maybe there's something else you'd like to share with someone about the mindset that they need to have in today's environment.
I'm going to do one better. I'm going to give you something right now that I just used within the last 48 hours, a phenomenal mindset example related to rates, related to getting somebody off the fence, and a complete flip of why it was even brought in to the scenario of the problem I was brought in to solve. All of it was different, and it was a tremendous outcome. You
Yeah,
want me to hit
sounds
you with it? Does that
wonderful.
sound
Yeah,
interesting? All right.
yeah,
So it's a builder, a little smaller builder, regional builder. We work with some national ones too. This was a regional one. So it's interesting because certain things sometimes really mean a lot to them. Like this one closing is going to make the whole quarter or the year, whatever it
right.
was.
Now I
Wow.
can order parts, right?
Yes. Lots of eyes on it, right?
Yeah,
So
yeah,
now I was touching on the wild swing in rates after the Fed drop and into October, right? So it hasn't gotten any better. The
right.
down quote, damage is already done. So we're stuck still in that environment. They bring me in because the in-house lender couldn't get anywhere in September. So now I'm like, okay, wait, I'm brought in now. The market's gotten significantly worse. I haven't gotten the right opportunity with this builder, and this is the one I get brought into.
Right. Now
Oh,
you get to tell everyone your rate is a half higher. Yeah.
yeah, I get to come behind and
Yeah.
oh, what am I coming in to solve?
Yeah.
The payment concern, the
Mhm.
monthly payment. I'm like, oh no. Ah. I said, okay, let's do it. Mindset, right? Let's do
Yep.
it. Clear all the negative thoughts. Let me get involved. So we start talking to the client. We start breaking down the payments. I start diving a little bit deeper in, some of their concerns, and then they bring up the rates. And I said, it's actually great. The rates have gone up.
And they go, what? Wait, I know. Yeah.
How's
Yeah.
that for a mindset shift?
Yeah. Right.
Oh, well, the rates have really gone up since we were looking at this. I said, that is phenomenal. That's great. And they didn't expect that. Now they're like, okay, what's this guy talking about? I said, here's why I'm brought in. This closing to this builder means a lot. Come the new year or any drop at all in rates, even back to what it was in September, all these discounts are gone.
Yeah.
We have a little window of time here heading into Thanksgiving, heading into the holidays, where you're going to get $40,000 off the home. That doesn't exist come spring 2025.
No, not when demand rises. Yeah. Yeah.
They then realize, how does this affect me? And how does this scenario affect me directly?
Hmm.
I said, listen, fortunately, you guys can afford this. You don't love the payment, but you can afford it. Kind of what I was touching on a little bit earlier. You can afford this, right? Okay. Well, by pushing through this and by going through these few extra steps, we've created tremendous opportunity because other people, one, don't want to deal with it. Two, maybe they can't afford it. They're not in the financial position that you are. So now we can leverage this asset, this opportunity. And guess what? Maybe even some deductions when you go file your taxes next year, because we're going to get this in for 2024. We're still in 24. Immediate shift, You couldn't
Yeah.
keep them off of this deal
Yeah.
with
Yeah.
a higher payment
Yep.
and totally different market. Thrilled buyers, thrilled. Now they
Yeah.
get it and they
Yeah.
understand it applies to them.
Yeah, and we can't rely on consumers to sort through, that maze that you just went through, right? The reduction in price, gives you more equity when the other side is going to be paying $40,000 more. So you automatically have instant equity and, all the little pieces and the innuendos that are in that. We can't rely on consumers to do that. And that's why we have to be absolutely professional in what we're doing. And I'm saying this because if you're listening to this and you're, skidding by and I don't really understand the Fed funds rate. I don't really understand prime. I don't really understand, yields. I don't understand the market. Then that's a challenge. That's a big problem, I think, moving forward. It really is.
Yeah.
And I think that, you changing your mindset first, you saying, okay, where can I find the yes in this? Where can I find the good in this? Rather than, ah, really, you want me to come in and try to sell? Well, I'm probably not going to be able to sell. So now I already manifested that it's not going to work. Right. And so, yeah, everything that we do in this industry is about mindset. I absolutely love that. Okay. So what are you doing now? This is my last question. What are you doing now, that's bringing in the amount of business that you're bringing in? And what do you plan to do in 2025 to make sure you bring in even more?
What I'm doing now, and I'm training the team to do as well, is get really good at maximizing opportunities, like really rigorous on the follow up, but not in an aggressive way, not in a
Right.
browbeating way, in a strategigive way, in an
Mhm.
intentional way. Just as powerful, but not coming on strong. Client doesn't even see that, but tremendous power. I'll give you an example. Client comes in, it's self-employed, and the taxes are off, whatever. They had slow first year, but having a great year this year. focusing on that opportunity and not looking at a deal, quote unquote, a deal. Can I make a deal
Transactional.
today?
Yeah.
And
Yeah.
say, what is this homeowner or business owner going to do with the wrong advice? And
Mhm.
in the next like 6 to 8 weeks or less, they're going to be preparing for all this.
Yeah.
So being intentional with that follow-up appointment, okay, when's this going to happen?
Mhm.
When are we going to follow up? Do you have the CPA? Is it the same one you're using? Are you getting all your forms together? Blah, 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 all that. Through the holidays, I'm approaching this as I'm having that appointment mid-January with that client as if it's a deal today. That's the
Yeah.
difference. And
Yeah.
continuously doing that as opportunities come in, we're
Yeah.
we're doubling and tripling them in some cases where somebody else will just walk by because it's not quick, easy money and we can't
Yeah.
reach it to the
Absolutely.
closing.
Yeah.
That's
Yeah.
what I plan
And
on
you
doing.
get into that cycle, and that's where the volume comes in, and so when we pass by and go, oh, their credit's low, or oh, they're going through a divorce and it's only been 2 months, we don't have enough history, right? And we pass by those deals, and we're always looking for these hot deals. I was in BNI for years, and we used to have these little referral slips, and they had a thermometer on the side of it. And I was like, well, what's up with the thermometer? And people would come to me and say, well, this isn't a referral because they're not ready to move. They're not ready to take action, in whatever product they were selling. And I said, but that's annuity income for you. So I created this thing called a 54321. It's like, these are my hot deals. Yep. They want to move, they want to refi, and here's a realtor, and here's a divorce attorney. Those are my hot everything. But then here are my not so hot, and then my not so hot, and my even more not so hot, right? And it went all the way down. This was back when we had the Great Recession, right? Went all the way down to they just walked out of a short sale. Grab them and have them call me, because if they go to the gospel of Google and they try to come to me 3 or 4 years later and say, well, I read, all I have to do is wait 3 years. No, but you have to do a whole bunch of other things too to make sure you're in position.
Yes.
So I always said that was annuity income, right? So if you want to have additional streams of income as a loan officer, don't have it be your transactions only, have annuity income. And that's exactly what you're talking about. Is I've got those life events, I've got annuity income set up, and it's my job to follow through to ensure that I make the money for it, right? And can serve the client.
Yes, I love that. Yeah, get better.
Yeah,
You want to get
not
busier, get
bitter.
better. That's what
Not
it is.
bitter.
Get better.
Yeah, I'm always telling people that don't get bitter, get better. Yeah, absolutely. I love it. I love it. Okay, good, good. So yeah, just I think what you're doing is just positioning yourself to nurture your entire database, whether it's your referral partners or whether it's your clients as well. I said one last question, but are you doing a lot of webinars and seminars right now? Are you doing a lot of one-to-many in presentations, in either holding your own and educating people? What does that look like for you?
Yes, I had success that I could share. I did two events. I did one in June and I did one in October with the intent to truly give back.
Mm-hmm.
And everybody, I mean, not everybody, but I see lenders in particular, I want to give back. Here's a loan app. Here, this is to help everybody. Here's all about us and how to send things to us. There was
Mm-hmm.
none of that. There was no loan app. There was no how to send a deal to me. They'll figure it out. They'll know how to find me. It's adding value. And what I taught and trained on was complex lending scenarios and how buyer agents can adapt and steer the ship a little bit, not steer the client, but steer the emotions and when
Mm-hmm.
to
Yeah.
step out and when to step in, when to follow up and when not to, and
Yeah.
how to be tactful with it when it's a credit issue, things like that. And I told everybody, I appreciate everybody here. We all work together in different capacities, but this is not about that. It's about giving back, and that's truly what it was about. It was
Making
tremendous
them
success.
better. Making
Tremendous
them better.
success. Yes,
Yeah,
and
making them better. I absolutely. And I think that's super. I think it's wonderful that you're doing that. And I think that I had this real estate agent a long time ago. I called it the Savannah syndrome, because she gave me so many referrals, but she didn't qualify the referral. And I remember when I said to her, are you qualifying? And no, that's your job. No. Yeah, but I need you to qualify the
No,
actual referral, not the loan, the referral. And so what you're doing is you're empowering them rather than enabling them. They're not plucking from the vine when it's too ripe, too soon. And if they are, they're not throwing it onto your conveyor belt,
well,
right?
that's a
They're
great
going,
topic.
"Ooh, that's not quite ripe yet. I need to massage
Yeah.
that myself." And that gives them power so that the clients stay with them too. And then their conversion is higher as well. Yeah, I love that you're doing that. I love that you're giving back to them and helping them, and so often people say, I just want to give, value or have stronger relationships. But when you ask them to define what that means, they're like, I don't really know. Well, I can close on time, have great rates, and
24 to 48 hour turn
show up
time.
again. Yeah, and I'll never show up again. I'll see you, goodbye, thanks. Next conveyor belt, right? So yeah, I love that you're doing all of that. Okay, so do you have a motto or a quote that you live by that you'd like to share with everyone?
Never say no.
Beautiful. Yeah, just not now. I have a friend who says, "Hey, it's never no, it's always not now." And he created and sold Constant Contact.
Wow.
Right? And
That's a
he
cool
got
story.
no's all over the place. And he said, "No, I just realized it's just not now." Love it. I love it. Well, wonderful. Well, thank you so much, Phil, for sharing so much of your wisdom with us today. I
Yeah,
really,
great
really
time.
appreciate it. Yeah. And congratulations on all of that you've gained, everything that you have in your life, and your success. It's just great to see. And especially in these times, it's wonderful to see someone who's so optimistic and positive outlooking. So thank you for joining us today.
Thanks for having me. It's great.
Oh, my pleasure. And we'll catch you on the next episode. See you later. Thank you for joining Mortgage Lending Mastery. If you found value in today's conversation and would like to get support, simply go to supportfromjen.com. That's supportfromjen.com, or reach out to me on social media. Keep watching and listening for more insider secrets, stories, strategies, and ideas to help you become a master in your business.